The US inflation rate accelerated in November and is at risk of getting out of control again. I'm going to discuss the details of the latest announcement on December 11th, 2024 from the Bureau of Labor Statistics and highlight what it could mean for you as a stock market investor and an individual operating in the US economy. So let's take a look. Hey everyone, I want to take a moment to thank the sponsor of this video. Moomoo is a trading platform where you can buy and sell stocks and other investments. I use the platform for investing myself. If you join using the link in my description, you can get up to 15 free stocks. So the consumer price index for all urban consumers increased by 0.3% on a seasonally adjusted basis in November. And that was after rising just 0.2% in each of the previous 4 months. So the rate of increase increased. And I'm going to show you a chart in a little bit that demonstrates this rate of increase is trending higher, and it looks like it's going to continue at that rate. This is going to put in question the central bank's path of decreasing interest rates, which I forecast is going to slow down considerably as a result of these latest developments. And I'm going to explain more so the details why I think that's going to be the case throughout this video. So the index for shelter rose 0.3% in November, which accounted for nearly 40% of the monthly increase. The food index also increased to 0.4%, and the at-home food index increased by an alarming 0.5%, while food away from home rose 0.3%. Now, the CPI number includes a basket of goods, and within that basket of goods, you have food and shelter. And you have all sorts of other items like car insurance and healthcare and electronics and energy prices, etc. Some of these numbers, some of these categories are more important than others. And I've done calculations on this. I've done research on this. If you didn't already know, my training in graduate school, I did the master's program in financial economics. So we did a lot of study on inflation and CPI and what it means and what numbers are actually more important than others. And shelter and food are more important than others. And I'll explain why that's the case. If you're an individual and you notice the price of rent or the price to buy a home is rising, there isn't anything you can do about it. There isn't a substitute product you can switch to. Let me explain further. If you notice that rents are rising everywhere, what can you do? If your landlord raises the rent on your apartment and you look around and you ask your friends and family members and their rents are also increasing. So rent is high everywhere. And let's say you've got a family and you don't want to live in a car, you don't want to live in maybe, I don't know what other there is no other option. You have to pay for the higher housing prices. And that's why inflation in housing is more important than inflation in arguably any other category. Because in any other category, you can make a substitution based on price. Let's say you are looking for entertainment and you look at the price for tickets to Disneyland and you say, wow, that's too high. Well, you can look at entertainment at other theme parks. You can look at Universal Studios, Six Flags Magic Mountain, Raging Waters, Boomers. There's several other entertainment options you can choose from that might give you a lower price, especially staying at home and watching Netflix, which is definitely a lower price. You have options, you have substitutes, you can switch. That's not the case with housing. You cannot switch to any other product from housing. You have to pay. You have to pay. That's why this number is critically important. And when this number is rising, it's very troublesome for inflation because it doesn't have the benefits of the substitution effect. Because in those other categories, like I mentioned for entertainment, if the price for Disneyland tickets is too high, people will switch to other entertainment options, and those switching will create a decrease in demand, and that decrease in demand will keep inflation under control in that category because customers will switch, right? You'll say, no, thank you, I'll do something else. But with housing, what are you going to switch to? You have no other area to switch to. Rent for apartments is increasing in all geographies nearly, and purchase prices for houses are increasing. So you don't have that substitute where you can go to create that control on that product to decrease the inflation in that category. So that's troubling. And it's the same is true for food, although not as extreme because food has several different components, right? You have beef, you have chicken, you have fish. And if the inflation for one of those is increasing, for instance, if you've gone to the market lately, you've seen the prices of eggs, you can switch to something else. You can have something else for breakfast instead of having eggs when the prices are this high. Housing is not the case. So that's why this is very troublesome for the US economy because the housing prices are accelerating and they've been this way since really 2020, since the outbreak of the pandemic and the government response, which I thought was very curious, to simultaneously tell businesses to close their doors and at the same time send out trillions of dollars in stimulus, telling everybody, hey, go and spend more money while we're going to reduce the amount of things that you can go out and buy. And of course, you had the impact that is always expected to happen when you have more money chasing fewer goods. That's going to lead to inflation. That's going to happen in almost every single occasion. You have more money chasing fewer things. The price of each of those things is going to increase. So this is troubling news that this is accelerating at this time in our economy. So here's the chart I wanted to highlight. You can see the 12-month price change in CPI. And you can see that nice trend downward here from February, March, all the way to September. You had inflation coming under control. But here we have two consecutive prints with inflation accelerating in October and November. And it's getting uncomfortable now. It's getting uncomfortable. 1 month of reading, okay, you can understand. 2 months of reading of accelerating inflation is becoming to be troubling, especially when you consider the reasons for this. The optimism in the economy has absolutely soared with enthusiasm because of the presidential and political elections resulted in November. Let me share with you this next chart. So here's the US current economic conditions index. And I have this going back 1 year just to demonstrate this change, right? You have the conditions index falling considerably. And at the same time, when this was falling, this is when central banks were saying, the economy might be heading into a recession, so we better start decreasing interest rates, right? But now, in these recent few months leading up to the election, and then, of course, the results of the election, you can see the economic conditions index are absolutely soaring. Asset prices are soaring. We have what I like to call an everything bubble. House prices are soaring. Food prices are soaring. Car prices are soaring. The stock market is soaring. Cryptocurrency prices are soaring, etc., etc. And you have this virtuous cycle, this feeding on itself of the cycle of things are increasing, asset prices are increasing, people are going to feel wealthier, they're going to go out and spend more money. That's going to lead to rising inflation. And so this is going to put at risk the central bank's easing of interest rates. So I think this is going to cause the central bank, they might cut interest rates again here in December by a quarter percentage point, but I think going forward, they're going to remain cautious. I think this interest rate cut is going to be what I call a hawkish cut, meaning they're going to cut the interest rate, or if they cut the interest rate, they're also going to simultaneously talk about their concerns about rising inflation to kind of decrease expectations of future interest rate cuts. And the reason they're going to do that is because interest rates is one way to keep a lid on inflation. When interest rates are higher, everything you buy that is connected to interest rates, like a car and a home, demand decreases because your monthly payment's going to be higher when you're incorporating a higher interest rate. So the central bank is going to try and keep interest rates elevated so that things don't get out of hand again and inflation doesn't get out of control again like it did a couple of years ago. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.